Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look at the gold market. So in general, our recent suggestion that market should climb slightly higher before any bearish signs could appear been completed. Market now stands mostly around the resistance cluster that we discussed recently, and in general you can see that overall performance upward action here looks not bad. It's because compared to the previous 5 sessions that have been formed inside the flag, recently we've got nice acceleration and breakout out of these long shadows, consolidation, which is probably might be, well, more or less bullish sign, but still at the same time, despite this action, market remains inside the flag pattern, and currently it's already challenging the resistance. So as closer to the CPI report we're coming, is more tricky situation is becoming on the gold markets. For example, on the daily chart, market currently is challenging and flirting with the May city predictor. For example, so yesterday we haven't got any grabber, but if today, for example, market will drop close below the close below the May city predictor line, this will be bearish sign, and it confirms our suggestion. Market indeed could start dropping below these lows, because this, well, it's difficult to call as some real reversal, and it has been formed after the strong pullback that's actually looks like the bearish reversal candle on the weekly chart. Additionally, if you'll take a look at the cross market analysis, let's just take a look at 10-year yield. As you can see, market is trying to break through the target of the butterfly. So maybe this is just fluctuations around the target, and maybe pullback will happen later as a response to this target. But still, interest rates are growing currently. And the next potential target of this, if we suggest that still market could just pass through it, keep going higher, will be 2.16. It's 1618 extension of the butterfly. So rising of the interest rates here is not really a good sign. Finally, dollar index currently is oversold, which is just doesn't let it to keep going lower if it even would like to. So it needs some time for to recover. That also could hold the bullish ambitions of the gold market as well this time. So currently I think that while it is too early to speak about a real bullish turn on the gold market, as the downside action still could start right from here. Here we have a few options to consider. So first is of course the daily grabber. So we could just keep an eye on the daily grabber. Once it will be formed, it will be easier to consider taking the short position, but the disadvantage of this point is that probably this we will get the different entry price. On the 4-hour time frame chart, you could see that market in general hits the all cluster target that we discussed. So market has completed this ABCD around 1820. It has completed this minor ABCD around 1823, somewhere in this level, and mostly standing right around 1825 daily fib level. So first step of our analysis recently has been completed. On the hourly chart, you could see that we have this kind of the free drive pattern, and it's also mostly is done. So in terms of the completion, the reversal point, potential reversal points. So here's, you can see that's, if I plan here the extensions of the second drive, you will see that it's more or less accurate. So here is 127 stands the second drive of the first drive, and that is the crossing of the two drives, two extensions from the different drives, 127 from the second and 1618 from the first. It stands close, and that is typical combination for the free drive pattern, and it also mostly completed. So we could suggest I'm flirting around 1824, maybe some minor reversal pattern will be formed or something of that sort, but that is the potential area to keep an eye on. So currently in this moment, and with the CPI on horizon within the 2 sessions, and the big inflation jump in the January statement of the non-farm payrolls release, I would suggest that CPI also might bring some surprise, which will be negative for gold market. Second moment on the cross-market analysis, markets either the overextended or, the dollar index or interest rates showing the upward direction. This is also not very good for the gold market currently and suggests, increased chance for the pullback. And forming of here some bearish patterns also might be the final point in the bearish scenario. So in the current moment, personally, I do not want to consider taking any long position. So speaking on the short position, here you could act differently. So the best choice is, of course, to wait for a clear confirmation of the reversal, forming some bearish reversal pattern either on the hourly chart or lower time frames that could tell you that market indeed showing reversal around third drive and with a stop placement somewhere above the 4-hour 618 resistance. It's above 1826 somewhere. This is first approach. And then probably we could also keep an eye on the daily chart, whether the grabber will be formed, whether this market will confirm this pattern. Supposedly, theoretically, you could try to anticipate, or if you do not have a lot of skills to catch right moment for entry, you could try to go short around this area and just placing stop above the 1826, but you should understand the risks. Currently, we do not have yet the clear signs of reversal, and that might be a bit tricky, especially when you're coming to major statistics release. It could be volatile, and so it's any kind of the problems that you usually meet when you're trying to anticipate just taking the position around resistance and supposed reversal point. Well, in this case, probably maybe, I don't know, maybe to decrease the trading volume or something of that sort. Although, in general, guys, risk is not very big. Fib level stands very close to the current situation. So choose what you like more. If you're not sure, it would be better to wait more and see what will happen. Because the patience also always rewarded on the market. So if you're patient enough and you could choose the right point for taking position, you will not miss your opportunity for trading. You will be in right place in the right time. So let's keep watching. That's our view on the gold.